Good evening, Manjay. Good evening, Krati. Good morning, Sikhar. Good morning, Gagan. And good evening to everyone. Thank you all for joining the session. We appreciate that. Good evening, everyone. Thank you all. And we'll begin shortly. In a couple of minutes, and then we start the class. So thank you. Good evening, Ajit. Good morning, Amik. Thank you all. One more minute, and then we start the class. Good evening, Ronak. Good evening, all. 30 more seconds, and then we will start the class in 30 seconds. Thank you. Okay. We do. So let us begin. Today is 28th. So what we did yesterday. So yesterday, basically we talked about journal entry. And in journal entry, we also talked about something called a journal entry template. So general entry template is basically you can create a template that will help you in a faster data processing. So many times you need to process data faster, and for that we can use general entry template. Then we also discuss about something called recurring template. Recurring template basically means many times we need to pay on certain frequency, and then we can set up that frequency like daily, weekly, monthly. So that is an example of a recurring template. And then yesterday we also talked about general voucher entry, and then we also talked about how we do the posting of general voucher. So those were some of the things and some of the concepts which we discussed yesterday. Again, thank you all and welcome you to the class. We talked about general entry yesterday. Yes, we talked about general entry yesterday. General entry and general entry template. And we also talked about yesterday about general voucher. So how do we enter the general voucher? And then we also look at the general voucher report. And then we also saw that from general voucher, how can we post a general voucher as well. So those are some of the things which we discussed yesterday. Now today, we want to talk about something called handling payment, banking process. So obviously, either we receive payment, we send payment. So how does those payments come and receive? And so how do we handle those? And that is what okay. So we have a handling payment situation in SAP. So we talked about how do we handle payment situation in SAP. In SAP, we can do payment processing in multiple different payment process. Now the payment process is two different ways, incoming or outgoing. So if you go here in the banking, in here we have an incoming payment where the money is coming in, and then we have outgoing payment where the material is going out. So we have a incoming or outgoing payment. Okay? So incoming and outgoing payment, which you're going to do in SAP. So we have incoming payment where the material is, where the money is coming in. For example, we have a customer, and then we have a deposit. So the second thing is a deposit. If you get a check, for example, you want a deposit. In the system, so we talk about deposit. And the second is outgoing. When we make a payment, for example, you make a payment to a particular vendor. So fundamentally, there are two processes, incoming and outgoing. And then what are the consequences of each process on the GL account, which basically means when you have incoming payment, when you outgoing payments. So how does this helps or this impacts our GL account? Okay. So how do we handle incoming payment? So basically means we have something called incoming payment transaction code. So here we have a manual incoming process. We looked at it. This is incoming process. We can run this transaction. We can do this exercise, and we will do this exercise multiple times. That is where we have incoming payment. Then you can deposit into the bank. If you want to have a check, if you want to deposit, you can deposit the check into the bank. So there is a deposit. So that is a typical manual payment process. We're going to do this exercise as well. Now what happens is, in SAP, there are 4 payment means. So there are 4 payment means or 4 payment methods. So that basically means you can have a 4 payment options. Now what are those 4 payment methods? So if I go back to here, if you go to incoming payments, if you go to incoming payment, and if I select, for example, a customer, any of our customer, now here we get all these different invoices, and red basically means how many days overdue, and the black basically means how many days left. So this is 1 day overdue, 18 days overdue, as for the payment term. So there is a payment term with the business partner. And now here, when we look at it, if we click on it or any of these invoice, and then here on the right hand side, there's a small icon, and if we click on it, so this is the payment means. So that is what we see here, payment means: check, credit card, cash, etc. So here we have a check, bank transfer, credit card, cash. So these are the 4 payment methods which we have in SAP. These are the 4 payment methods. We have these 4 payment methods: through cash, check, credit card, bank transfer. When we do AR invoice, there is a journal entry. We looked at it several times. When we post incoming payment, again there is a journal entry, because when you post incoming payment from the customer, there is a incoming payment. At the time of AR invoice, we saw customer get debited. At the time incoming payment, if you look at it here, customer get credit. Reverse. And then there is a clearing account, and that clearing account get debited. Okay. So we have a credit and we have a debit. When we go to deposit step, we see here there is a step of deposit. So there is a deposit step. In the deposit step, the bank get debited, and this clearing account, whatever it is, that get credited. So we're gonna do these transactions. We're gonna create AR invoice again. We're gonna do incoming payment again. We're gonna do deposit into the bank again. So we did this exercise before also. So we're gonna do this. Let's do this exercise end-to-end incoming payment one more time. Okay. So I close all these windows, and then I go to sales cycle. I go to, let us say, sales quotation. Okay. So I open the sales quotation. Then we go to customer. So we select any of our customer which we have been selecting. We select any item number, doesn't make a difference. So let's say this item, whatever it is, and this item is 27,000. What are the price we have entered? 11% discount. The total is 24,030. Okay. Then we say add. So we create a quotation. After the quotation, for example, we create a sales order. So we create a sales order. This is a regular sales order. We have done many times. So I'm going fast. There is, because sales order we have done many times. So we save it. We save. Okay. We create a sales order. After creating sales order, the next thing which we do is a delivery. The next thing which you want to do, I want to create a delivery document. So this is the customer number, name, right? And then we save it. So we create a delivery document. Again, it's a very similar to what we have done before. So same delivery document as we have done multiple times. Okay. Good morning, Sunny. Okay. Good morning, Sunny. We did delivery. After the delivery, then we create AR invoice. Okay. So we are doing. Okay. So here, and we add, and we save it, and we enter the tax, whatever the tax amount is. Enter the tax amount. Okay, and then we save it. And then we save it. Okay. So this is the same cycle. So far, okay. Okay. We have a year invoice. Then we go to relationship map. So this is the same sales cycle we have done many times, right? Nothing different. So this is the same cycle which you have done many times. Your voice is not clear. Oh, okay. How is it now? Is it better now? Is my voice okay? Not? Is clear? Okay, wonderful. Sorry. Okay, so we create a. Okay, thank you guys. So now we go to relationship map. We get a year invoice. The same sales cycle we done. Nothing different. Nothing unique. We close it. Now after that, we go to banking. Now we go to incoming payment. We go to incoming payment. Now I select that customer which we created our invoice. So this customer was microchips. And now this is so many reds. So all these reds are the number of days this invoice is pending. So all these different thousands of invoices are there. And if I go everything very much in the bottom. So this was, now if you see here, so this is the document number 650. This IN is a document type. J is a journal entry or voucher, journal entry which you have done or through voucher or whatever. Then this is the document we created today, which is 1028. It's 60 days. So system telling me this payment is due after 60 days. The total payment amount is 24,000. We have a 24,991. Okay. And then the balance is 24,991. Now there is something called cash discount here. See that cash discount, 10%. Now what is the meaning of that is? Okay. So that basically means that system says that because I'm going to pay this before 60 days, so there is a 10% cash discount. Then what system does, the total due becomes 22,492. So 24 and then 10% discount off, then total system say that if customer gonna pay today, then customer can. If you want to make it this zero, you can make it zero as well. If you don't want to pay any cash discount, you can remove it. Say, no, I don't want to pay any cash discount. Okay. So when I remove this cash discount 10%, then this 24,990 and 20, and this amount becomes same. Okay. So you can choose, or if you want to pay cash discount, you can pay cash discount, but it comes voice issue. What? Can you guys repeat the point? If we get money before due date, then we can get cash. We don't get, we provide cash discount. Because in case of a vendor, we can deduct. So if we are paying to the vendor, we deduct cash discount. In case of customer can deduct the cash discount. But here also, you can change here as well. Okay. So here also, this is the 10% coming here. Okay. So here, now I want to review the customer. We reviewed the customer before. So I want to customer again. So if you go to code here, if you click on it. So this is my customer. We created a customer also before, if you remember. So this is my telephone number, fax, business partner type and all that, which we did before. And the remark, sales employee, territory, contact number, and all that information we did before. So this is the customer number which we have entered before. Okay. Then we talked about there's a contact person, and okay, Buddha Suraj is one contact person, and he's a CEO, and then there's Inderjeet, and he's a sales manager. Contact person we talked about. Then we talk about the addresses. In this addresses, you can define different addresses like ship to party, bill to party, and all that. So you can define different addresses. Okay. Now how we go to payment term? Now here, this 60 days which is coming there, this 60 days is coming from payment term which you defined here. So this is the 60 days payment term. Okay. So here, if you go in the detail of it, we can see that. Now this is 60 days payment term. And this is because the 60-day payment term which you define, so 60-day payment term coming from here. If I want to define as many payment terms, we can define as many payment terms as we want to define. So the payment term comes from here. Now, apart from the payment term, if you go back and you can also define many payment terms as well. We see that here, many payment terms. It's called down. You can define as many payment terms as you want. So this is the definable, and many payment terms, you can define. And then here we also have a price list, which is assigned to, so the price gets determined from here. Another thing which I would like you to, there is a credit limit, because in SAP you can also assign the credit limit to a customer. So credit limit is assigned here. Dunning basically means, so there's another field which is interesting from the payment perspective, is the dunning. So in the dunning, basically you can set the automatic reminders. So that is where we have a dunning, which is being defined here. Okay. This is the credit card information. So if this customer is going to pay by credit card, then you can also define the credit card information for the customer as well. So we have a credit card information as well. So this is the credit card information which we can define for a customer. So a lot of this information is important. Now this is the bank, business partner bank. So this is that. This is the bank of the business partners. So this customer handling in what bank? So this is the information of the bank from this customer. So a lot of this information has a direct and indirect impact on the payment. So understanding all these different information which we have here is important. Then we go to payment term. So if I go to payment run tab here, so here we have something called house bank. Now there are two things. This is the one bank. This is the bank of business partner. This is the bank of my customer microchips. They are all SDFC. Seems like SDFC is a very, favorite vendor for supplier bank for everyone, but that's fine. So business partner bank is SDFC. Now here we have a house bank. Now house bank is our bank. This is the bank in which our company is working on. this is my SDFC bank account number 243639 whatever, and you can define what is the account. This is the account number of the business partner. In SDFC, bank is same. Of course, account number has to be different. So this account number in SDFC of my customer, and this is our account number, means our company's account number. That is why it is called house bank. So this is the house bank which we can define here. Okay. And apart from that, so all that information is important, relevant from the payment perspective. Then we go to accounting. In the accounting, we have here, if you remember, control account. So this is a control account 140000. We talked about this control account before. Now, what is the control account? Control account is a reconciliation account. Okay. So this basically means, reconciliation account basically means that you can have and then basically means we can, this is when we're making a payment to this customer in the back end, this is the control account. It updates this account. So we saw that, we did that exercise as well. So these are some of the information. There's a tax information also which you can put it. So this is the PAN number, you know, nowadays we have GST number and all that, so you can put it, that information here. So this is information which we need to be aware, which is there in a business partner. Okay, so we close. So if you want to pay cash discount, good. If you don't want to pay discount, you can manually decide. And then if you click on this button here, and then you say, okay, this customer is going to pay by check. Now, check is very, very common. Yeah. So here we can put a check. This is my check number 24991.20. So this is basically my there is a different configuration for all those taxes. So here we save it, we save it, we save it, tax code and all that you define. So what we did incoming payment. Now let's understand the one thing which I would like you all to be aware. If you want to be a SAP consultant, this is very, very important. This end-to-end cycle is very important. Sales cycle is very, very fundamental. So if you go to year cycle, if you see the relationship map, this is what we have done. We created sales quotation, we created sales order, we created delivery, we created year invoice, we created incoming payment. This is the end-to-end cycle. We saw that many, 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 many times. Nothing different from this. Only difference is that incoming payment which you posted here. Now, remember, I mentioned about okay. So here we have a sales quotation, we have a sales order, we go to delivery. Again, I go to delivery and I go to journal entry. We talked about it. Stock account get credited because stock is reduced. Cost of goods sold get debited. Very important journal entry we talked about, we need to know. We close this delivery. Then if you go to air invoice, now see the green light, green arrow, check mark. That basically means this invoice has been paid. If we click on it, and then if we right click here, and then we have a journal entry. Okay. So here, this is another journal entry, which is a time of customer invoice, in which my customer microchips has been debited with 24,919.20 paisa. I have a tax 961, and I have a sales revenue 24,030. Okay, that is what we can see. So this is debit this, credit this. This is another very, very important posting. No SAP consultant can get confused about it. Okay. Then we have incoming payment here. We click on incoming payment, and this is incoming payment. Incoming payment number 650. This happened on this date. This is the amount, and then if I go back and if I check my journal entry, so I have a journal entry here also. Microchips, my customer has been credited. At the time of invoice, my customer is debited. At the time of my payment, my customer is credited. And whatever the clearing account get debited. So that is how account entry happens. So we saw the account entry at the time of delivery, at the time of customer invoice, at the time of payment. 3 places, very important. We can, as a SAP consultant, if you're confused about it, you can never be a SAP consultant. So these 3 entries are fundamental, okay, in the sales cycle. So this is the end-to-end sales cycle, and we post incoming payment with a check. There is a deposit here. So if you go to deposit, and you see all my checks. So these are all different checks which you have here. Okay. So this is a check, and I can put account, which account I want to put it. So I can select my account. So this is HDFC Bank. Now, if you see here in the bottom, 10/28, which is today's date, and bank is HDFC Bank. This is the account number. This is my customer master, microchips, and the check amount is 24,920. So this is my check, and this was the check which we got today. So this was incoming check which we posted today. We can put it here, whatever, test. We can put some transaction number. Incoming 132 on, it's like you're putting a comment. We can put it here, and then we hit enter. Operation completed successfully. I go back. So this is deposit number 8. So this is HDFC Bank. This is account number. This is the date, 10/28 in HDFC Bank. This is the account. This is the customer. We did a deposit and gave this incoming payment 131. If I see the journal entry, there is a journal entry at this time also. So now my bank, HDFC Bank, has been debited because this is the bank I put my amount, and my clearing account is credited. So we debit and we credit. So we did a deposit in the system. If I go to incoming payment, you will see that incoming payment associated to it, and if you go back to the relationship map, this is the transaction we did, and that is where we do our end-to-end transaction. This is what the end transaction we did with the check. So what we did, so we did end-to-end sales cycle, in which we created sales quotation, we created the sales order, we created a delivery document, then we created a customer invoice, or called AR invoice. Then we did incoming payment. And then we did a deposit in the bank. So here, this time, we have a general entry, automatic general entry. This time, we have an automatic general entry. Incoming payment, we had automatic general entry. In deposit in the bank, we have automatic general entry. So these were the 4 general entry which happened end to end in the sales cycle. So that is how we can do our end-to-end sales cycle in the SAP. Okay. Now, if I want to do end-to-end purchase cycle, okay, and then how do we go till end-to-end? So we close this, we go to purchasing. So let's say we select purchase request. So we select item, what is the required date, and then we can add and view, purchase request created. After that, we purchase quotation, we select the vendor, which vendor we want, Acme Associates. We go to quoted date, quoted quantity, quoted price, so 7,000. Okay. And we add and view. We get a quotation, and after creating quotation, we go to purchase order. These are all transactions we have done, nothing different. We have done this transaction multiple times before, so in this transaction there is nothing new. So that's why I'm going quickly. So purchase quotation, purchase request, purchase order. Now from the purchase order, next step we want to go is a good receipt. Is a good receipt posting. So here we can do good receipt posting. We add. We did a good receipt posting. After that, we again go back to the account payable. Now, I'm doing this step so we can complete cycle. We go to add and view. We edit. We put a text code. We add. We add. Okay. What we have done so far. So this is what we've done. Right? We create a purchase request, purchase quotation, purchase order, goods sharing a PO, and then we create account payable invoice. These steps are same, nothing different, nothing unique. We close all of them. That's why I did it quickly. After that, I want to go to banking. I want to go to, last time we were to incoming payment and we go to deposit. Now I want to go to outgoing payment. So here we go back to my customer, my associates. We select our customer. Okay, so here, so today we did this transaction. So this is my account payable AP invoice number 547 on 10/28, which is today's date, and the total amount is 7,280 and 7,280. So this is the amount. Okay. Now, if you go back to here, now I want to go to the business partner bank again. So this is B001. If I click on it, if I go to vendor account, so this will go to vendor. So last time I went to customer, this time I go to vendor. Okay. Now here in the vendor also we saw that before. I just want to quickly recap where we say we have a vendor master, associate, general information, right? On all that address and all that. Contact person is whatever we discussed with who's my contact person at the vendor side. So that is a contact person. Then addresses, ship to, bill to, and all these addresses. Now here we have a payment term. So we can define different payment terms, whatever we want. Okay. So these are the different payment terms. You can define price list if there is any discount. And if you see here, again, there is a business partner bank. This is the bank of the supplier. This is the State Bank of India, SBI. So his account is in SBI. So that is the bank information of the business partner. So bank information, customer also, bank information in vendor also. So that has to be on both sides. So we have bank information on the customer side. Then we go to payment run. Here, this is house bank. So house bank is our bank. This is our address, our bank account information. This is the bank information which we have set up. We can set up as many banks as we want by country. And then we go to accounting. Here, one of the things important is control account. Remember, we talk about the control account. So there's a control account or reconciliation account for customer. There's a customer reconciliation account for the vendor. What is reconciliation account? Is a subledger. So when you enter, when you make a posting to a customer, you're debiting a customer, goes to some control account in the backend. When you're crediting a supplier or vendor, in the background is going to some subledger. So this is subledger which gets updated. And what else? Property that is fine. So these are some of the important things which is important on the business partner. So this is the business part. So now again, if you go back here, and I want to go to check, and this is amount 7,280. This is the check which you are sending. You see that here. Then we put an amount, and system says this is my overall bank, overall amount, balance due, paid 7,280. Okay, okay, and add. So now, if you go back here, relationship map, what happened? If you go back to relationship map, this is what we did. This is end-to-end purchasing cycle. Request, there is no J. Quotation, there is no J. purchase order, we have no J, no journal entry at the time of purchase order. Good receipt, there is a journal entry. Account payable, there is a journal entry. Outgoing payment, there is a journal entry. So this is my end-to-end purchasing cycle. So we need to understand. So the sales cycle, after we close all these windows, close all this, and then we go to end-to-end purchasing cycle. So here we do a purchase request, and after purchase request, we go to purchase quotation. Then after purchase quotation, we go to purchase order. Then we create a GRPO. Then we create the AP invoice. AP invoice is also called a vendor invoice. And then after that, we did outgoing payment. Okay. Now, at the time of GRPO, there is a J. At the time of AP invoice, there is a J. At the time of outgoing payment, there is a J. So journal entry happens at these three places. We need to know, now look at those journal entries. So I go back to my outgoing payment. So this was my outgoing payment, which we did for 7,280. If I see my journal entry, so my vendor has been debited. My bank has been credited. If I go to my relationship map, and if I see at the time of AP invoice, if I go to relationship map here, so if I go to AP invoice, here there is journal entry where my ECMO associate, my vendor is credited, tax is debited, and clearing account is debited. If I go back after AP invoice, go to GRPO, and if I right click on the journal entry, again there is a journal entry here, stock account is debited because stock has arrived. Because the stock has come in, the stock will be debited. Clearing account would be credited. After that, we close it. If we go to purchase order, there is no journal entry here. If we go to purchase quotation, there is no journal entry. So there is no journal entry at these places. Okay, so that is how we can so we can have our end-to-end purchasing cycle. Okay, so we did one. Now, no voice. Okay. Now we go back to the next step. So we did. I want to do one more cycle. Like I go to sales, and let's say I start with a sales order. Doesn't make a difference. I create a simple sales order. And I'm creating this quickly, so because we have created the sales order many times. So I just want to quickly do it. So sales order. After sales order, we go to delivery. Then we go to delivery. Okay. So this is a delivery, and after delivery, we create a custom invoice. Enter the text code, add a yes. Okay, so we create another invoice, another custom invoice, sales order, delivery, AR invoice. Okay, so this is the custom invoice number 651. We close it, we close it, we close it, we close it. Now, again, I want to go to banking, incoming payment, select my same customer as we did just before. So I'm just doing quickly because we have done these steps before also. Now here, there's another invoice appears. This again, 1028 and 24,000 and whatever, and cash discount and this and that. And here we go to, so this is the payment link. We have a check, we go to bank transfer, test, we do an amount, 24,991.20. Balance is due. We hit enter. Yes. Add and add. So now what happened is, so this is another one we posted, incoming payment. This document number is 651. Then we see general entry. Now here in this, we have customer, microchips, credited, payment debited. Payment method through cash, through the bank transfer. So this was an example of how do we do the bank transfer. So here, what we did sales cycle. This is another exercise which we did. So here we have entrance sales cycle. This was incoming payment through check. And so here we have incoming payment through bank transfer. This was through check. and this was through bank, through check, and this was through bank transfer. This is the second exercise. Now I want to do one more. Too many exercises today. So we close this and we go to sales. We go to sales order. We go to microchips, and then we put our item, the date, add. So this is another sales order, another delivery. And then we go to year invoice, add the years. Okay, we put a tax, we add, we save. So operation completed successfully. Okay, so what we did, we created simple sales cycle. We have done many times. Nothing to repeat. Sales or delivery invoice. Invoice number 652. So now we close it, we close it, we close it, we close it. Now again I go back to the bank. So this is the bank. Then again I go back to incoming payment. Again I go to incoming payment. Select my customer. So this is my customer. Same customer for which we create an invoice. And I go all the way in the bottom. And here we have an invoice number 652. On today's date, cash discount, we remove it. We don't give any discount. And here I go to again payment term. And this time I go with a check, with a cash. So customer pay us cash. Incoming payment, cash. And then here we can put amount, which is 24991.20. Due balance 0. Add. So what we did, we received the money in the cash. See that here? So we have microchips, credit, customer has been credited 24,000, and cash account. Because we got in cash, so we can put in separate account. So cash account has been debited with the 24,991. What we did in this example, this end-to-end sales cycle, we did this exercise with cash. If customer want to pay to the cash payment. Okay, so we did a cash payment. So these are some of the exercises I want to show you how we do this. And I have a good news. What is the good news, by the way? Anybody knows? What is the good news? समाचार समाप्त हुए. So class is over. Class is over. We'll talk tomorrow. And this Friday we will end it. So this agony, this pain will over on Friday. Can you believe it? But that's going to happen. So thank you. Talk to you guys tomorrow. 2 more classes tomorrow and on Friday. Then we are done. Thank you guys. Bye. Thank you. Thank you guys. Bye guys. Bye.